Welcome back to Tag Economy, where we break down the wild world of global economics with a dash of humor and sarcasm. Today, we're diving into China's latest move to ditch the dollar faster than Joe Biden can forget he's a president.
But I tell you what, I don't know about you, but I'm going to go to bed.
Yes, today we are talking about de-dollarization. So, what's the scoop? According to Bloomberg, China sold a record $53.3 billion worth of U.S. treasuries and agency bonds in the first quarter. Now, for those of you who are keeping score at home, that's more cash than most of us will see in 100 lifetimes. China has been offloading U.S. debt like it's a bad habit, and the numbers are staggering. In total, they sold around $300 billion of U.S. treasuries between 2021 and mid-2023. It's like a clearance sale at Walmart, but with a lot more zeros. And look, who doesn't like a good clearance sale, right? But why this sudden urge to dump U.S. bonds? Well, it's all about the yuan. The Chinese yuan has been weaker than Joe Biden's grip on reality lately, struggling against a rallying U.S. dollar. You see, the dollar has been hitting the gym with the U.S.'s hawkish monetary policy getting stronger every day. The U.S. dollar index is up 4.9% year to date, making imports into China as expensive as a private jet for the average Joe. Imagine going to the store and finding out your loaf of bread now costs $100. That's exactly what it's like for China right now, thanks to the greenbacks rally. And it's not just about imports. A strong dollar means China's exports become more expensive and less competitive on the global market. It would be like trying to sell overpriced knockoff Gucci bags at a flea market. We all know, no one's buying, bro. China's been offloading these US bonds not just to prop up their currency, but also to avoid the financial chokehold of a dollar-dominated world, which we've had for some time. They're like, we've had enough of this. Let's find something else to stash our cash in. And let's face it, what's shinier and more reliable than gold? So, what's China's plan B? Gold. Lots of gold. Beijing has been buying up gold like it's the last Twinkie on the shelf. Now, gold makes up 4.9% of China's reserves. It's the highest share since 2015. It's like they're turning their rainy day fund into Fort Knox. But we all know China's not alone, right? Other central banks are also snapping up bullion at record speeds. It's almost like a global gold rush, but without the pickaxes and the cowboy hats. Everyone seems to be getting in on the action, hedging against the volatility of the dollar and looking for safer, more tangible assets. But wait, hold on. There's more. China isn't just buying gold to hedge against a weak yuan. This is a part of a broader movement to diversify global finance and chip away at dollar dominance. It's like they're saying, hey, we don't need your stinking dollars, and they're backing it up with action. Remember when the West slapped sanctions on Russia and restricted dollar transactions? China took some notes. They saw and realized how the dollar could be weaponized and decided it was time to diversify their assets. So they're not just hedging their bets with gold, they're also exploring other currencies and assets. Do you really blame them? It's like they're deciding to play a new game altogether. As we're on the topic of weaponizing, let's not forget the good old US tariffs. The Biden administration has slapped tariffs on a range of Chinese products, all the way from electric vehicles, all the way down to batteries. I mean, you kind of look at it like a trade war, but with more paperwork and less fireworks. And even if Trump makes a comeback in November, he's promised to up the ante with tariffs as high as 60% on Chinese imports. This is really like watching two kids fight over a toy, except the toy is global trade and all the kids have nukes. And if there's one thing that Trump loves more than his spray tan, it's a good tariff. So to wrap it up, China is ditching US bonds, propping up its yuan, and buying gold like there's no tomorrow. They are diversifying their reserves to reduce reliance on the dollar and protect themselves from potential sanctions. And let's even break it down a bit more here. China's selling spree is a signal of broader trends. They're not just reacting to the immediate pressures of a strong dollar or the threat of tariffs. They are setting themselves up for a future where the US dollar isn't the king of the hill. Think of this like switching from MySpace to Facebook before everyone else did. And why gold? Well, Because we know it's the ultimate insurance policy. Duh. It's tangible, it's universally accepted, and unlike fiat currencies, it doesn't lose value when politicians decide to print more money. Gold has been a safe haven asset for thousands of years. Even pirates knew this, and they didn't even have TikTok to tell them what was trending at the time. This de-dollarization isn't just a Chinese thing either. It's a global trend. Countries all around the world are looking to reduce their dependence on the dollar. And again, I don't really blame them. The US's habit of using its currency as a geopolitical tool has spooked a lot of nations. They saw how quickly the West could freeze Russian assets. And they're thinking, well, we don't want to be next. So what does this mean for you and me? Well, it means that the financial landscape is shifting. The dollar might still be dominant, but its group is loosening. And as China and other countries pile into gold, we could see precious metals playing a much larger role in international finance. So, should you start hoarding gold under your mattress? Well, maybe not yet. Maybe not under your mattress at least store it somewhere safe. And this is all just a great reminder that diversifying your investments isn't just smart, it's necessary. Gold, cryptocurrency, real estate, stocks, bonds, a little bit of everything can help you weather the financial storms that are coming. And hey, look, if Joe Biden can diversify his excuses for why he always seems confused, you can diversify your portfolio. Remember, folks, even if our leaders are acting like it's their first day on the job, you don't have to. Stay informed, stay diversified, and keep a close eye on these global trends. Thanks for tuning in to Tag Economy. Don't forget to subscribe, like, and hit that notification bell so you never miss an episode. And remember, look, in the world of finance, sometimes you have to laugh to keep from crying. See you next time.